we do want to make sure that there are times in our businesses where we are going to sustain, and then there are times that we are going to grow. Welcome to the Moms Makin Dough podcast. I am your host, Kendra Hewitt, and I'm so excited to have you today as I dive in to my quarterly business review process that I do with all my one-on-one business coaching clients. And I just wanted to kick off with something a little bit personal. Last night, this is truly, you're going to see my ADHD in action. I'm one of those people that I have to write down things for it to like process in my brain. So last night, I was looking at flight options and I didn't notice this, but my daughter must have come up here before bed. And on it, my flight options, I have this awesome smiley face. And it just made me smile as I went to go pull my notes for my outline for what I was going to cover today. So, for all of you mompreneurs, this episode is for you. Reason being is that this is the quarterly review process that I have created, the framework I work all of my one on one clients on at the end of every quarter. So you're going to get a little bit of insight, and I am also going to provide some resources for you if you are a mom entrepreneur who is looking to really up level your business. And here's what I want to give a little caveat. When I start this quarterly review process, usually, especially the first time with one of my coaching clients, it is usually daunting in this capacity that sometimes you do not know the answers to these questions. And I always say part of this assignment on my one-on-one with my one-on-one clients is to actually shine the light on the fact that there's metrics that matter in your business. And sometimes you don't even know what those are. And that's my job as your coach to be able to do that. So I hope you enjoy getting a little glimpse onto what some of the metrics I think really matter when it comes to managing the growth and maintenance of your business. Regardless of what type of industry you're in, this can be applied. And I'm going to share and put together a template that I use with the actual questions that I have each of my clients review at the end of every quarter. So we're coming up, we've just finished Q1, which is unbelievable to say. And this is an awesome time to really get into this framework that you're going to repeat 4 times a year in an ideal scenario. So, quarterly review process. The first step, I'm going to give you 5 steps that are my basic, and I'm going to outline about how I add them, how I integrate them into clients' coaching programs. But then I'm also going to give you a couple bonuses that, depending on the level of clients' expertise and their reps in it, I will add. But this is the kind of the whole kit and caboodle with the bonuses. This is what I recommend is that the very minimal, if you have a business, and this also can apply if you are in sales of any sort, this is a framework that you could really use depending on, doesn't matter what type of product or service you sell. So, and I should also preface this too, is that a lot of times what I find is that when women come to me who are entrepreneurs or small business owners, what I find typically is that they do have some sort of metrics that they are measuring. Um, it is also very common for me to see women entrepreneurs that come to me and they're like, "Hey, my bookkeeper does that, or my accountant handles that," which is really a lot of the mindset shift that I'm looking to get away from. But you would be shocked at how many women are in that situation. And that's part of what I really love about coaching is that you start to build a relationship with these people where with clients where they really start to have a level of vulnerability and awareness that allows them to create the shift. I think there's nothing more true than the fact that awareness is the first step to changing and shifting any habit or behavior and or outcome. So, this is really the top 3 things that regardless of where they are at their business, whether they're a six-figure business, revenue business, seven-figure, or if they're just starting out, I have them use the same exact framework. Obviously, the numbers are just a little bit different. So, the top 3 things, bare minimum, that I have them review this on a monthly basis. At the end of every month, they look at these 3 metrics, and depending on what industry you are in, there's a lot of leeway here where you probably have maybe industry specifics, what we call KPIs, key performance indicators. But what I find that these 3 metrics are the ones that really matter regardless of if you have industry specific KPIs. So, first one is going to be new leads generated. So this is going to be the major basis of like, hey, how many leads came in. And this is going to be a really big indication of what type and what quality and what consistency in your marketing entails. This is what this is measuring is like, is my marketing working? Now, this is not tracking cost per lead, return on investment, all of these things that while might be important to your business, this is a little bit more general metric because what I find is that most women entrepreneurs, they need the simplicity. If you are a mom and you're balancing family, home life, your health, your business, your money, you are spinning all of these plates so rapidly, just waiting for one to come crashing down. And usually, let's face it, there's one that is completely shattered that needs some rebuilding. And so with that said, I want you to really think about this premise here is 2 things that one, my coach once said to me that was really, really impactful is that he would say, every business challenge is actually a being challenge. And what he meant by that is that it's an actual self-worth or self-confidence, self-love challenge that's showing up somehow in my business. I want to lead with that. But the second thing that I always say, and that's what applies to this metric, is that every business problem, the second part of that half truth, is usually a visibility or a conversion problem. It's one or the other in terms of applying it to your business when it comes to a tactical approach. So if we look at like what's happening on an internal level, an emotional level as the business owner, and then we look at like what's happening in the business from a tactical standpoint, this is these tactics that we're going to start looking at. So number one is going to be new leads generated. I like to teach this. Let's say you had 20 leads come in for your service that you provide. I really try to break this down where I keep it a little bit more general, but then when I work with someone one-on-one is when we start to dive down into the details of what does this new leads generated mean? Because it's going to dictate how I spend my time as a business owner. Because the number one thing that I find most business owners avoid and is actually the most important thing in their business is what are they doing for marketing? Because if you don't have leads, you can't have conversion. And if you don't have conversion, you don't have cash coming in. And therefore, you either have a broke business or a business that's actually being thought of as a business, but it's actually a hobby. So I want you to think about this. This is what I like to teach is that I work all of my clients. Once we start to know and see the trends of how many leads are being generated, we are able to have data to set targets that would allow us to know exactly what we need to bring in for maintenance and exactly what we need to bring in for growth, and also give us red flags if we are starting to shrink our business based on the number of leads coming in or if our marketing is not as effective as it once was. So, whether you are starting from scratch or scaling, this is kind of my formula that I work with on new leads. And it's like I like to work people up to what I call a 50-50 split here, meaning that 50% of my business, my new leads coming in, is going to become from referrals and organic sources. So, when I say referrals, that's a direct referral, right? Which costs me zero, but my conversion is typically a lot higher and organic leads, right? So organic leads being from social media use, and or email database. Those are really how I break down those two. And then we're going to have that other 50%, especially when you get to this point where you are able to spend money, which should be a goal on for everyone, is that you should be able to invest and spend money in the marketing category. Um, is 50%. So 50% organic and referral is always my goal to work a business owner towards that. Obviously, they don't always start that way. Some do. And then 50% is going to be paid type advertising. And that's not just going to be digital. That could be other avenues based on your business model and your industry. So that's number one, is what is the number of new leads generated that I generated this previous month? Then the second thing I'm going to have all of my mompreneurs look at is sales. So, marketing and sales, they're two different things. Marketing is the attraction of a lead in, and then sales is the conversion. So, as I said at the beginning, is we're looking at the actual influx in. I like to talk about this as the metaphor of the front door and the back door. Right now, we're looking at the front door. So, the front door is those new people coming in, and sales is also our front door activity where we are making a conversion from a prospect into a customer. And that customer, this is also going to show me what is my cash collected. Now, when I talk about cash collected, for me in this category, which you're going to see in the next one as well, I'm talking about one-time transactions this month. So, for example, let's say I launched a new program or a product this month, and I had $15,000 in sales from that one program or product. And that was a one off sale, meaning I sold that person at the current moment. It's a one off sale. So I sold the person into a program. Then I'm going to have to fulfill on that program, whatever, or that product. Right. And so I'm looking at like, what are the actual sales that I had? I call them over the counter, even though many of my clients are digital type businesses. So there are e-commerce type businesses. So looking at this though as if this is a one-time sale, even though we're going to get to the next part, which is going to be retention. So third is going to be retention of clients. But when I look at the second category, sales or cash collected, this is my conversion metric. This is telling me, hey, if I got 20 new leads in, but I only converted two of those people at, let's say we said $15,000 in sales, so $7,500 each. That's pretty good based on, it sounds like pretty good, but it might not be pretty good based on the actual conversion rate. Is that like I actually need to be closer to a 5 person conversion rate to hit my money targets, right? So this is where money targets kind of really, and reverse engineering your money targets for your business starts to make a lot of sense and put the puzzle pieces together for me. So this second metric, sales and cash collected, conversion metric. And here's the thing, of my gross revenue for the month, my goal is the Pareto principle. Many of you are familiar with the Pareto principle, otherwise known as the 80-20 rule. And I want 20% of my monthly sales or revenue to be from this one, in this one category, this sales cash collected. So if I need to make $20,000 a month, that's my target for my business. Then what I need to do is I want to see if I can land where 20%, so my one-time sales is going to be of this percentage of sales. So because that's going to bring us to our next metric, and where 80% really should be coming from this next metric, which is retention. So this is retaining clients that you have. So this is went from that initial conversion to where now they have bought from you multiple times or you have upsold them. And I like to majority of my business owners, whether they are brick and mortar business owners, which I have many, or they are digital business owners, we're looking at creating products or services that we either upsell or we have a membership where there's some sort of reoccurring revenue. I have found this 80/20 rule when it comes to cash collected, 80% being reoccurring monthly type revenue versus one-off sales in section 2 is absolutely the most freeing and sustainable model regardless of your industry. And I this is the model I teach, and I have found that there is not many people that this model cannot work for in working with hundreds of business owners in establishing this model. Now, granted, you do not start here, right? If you're starting from scratch, you don't have retaining type clients. So we start looking at different things here, like getting to that first client and then multiplying, taking that first client from one reoccurring monthly payment to maybe where we have three reoccurring monthly clients, and we start a build of a really strong foundation here. So that's sales. And then, like I said, we're in retention now. So this is going to be number of clients retained. So this is the metric that really shows us like what is our growth trajectory, right? Where are we growing? Are we sustaining? Or are we starting to shrink? Right? Because obviously we don't want the shrinkage. No one does. All right. But we do want to make sure that there are times in our businesses where we are going to sustain, and then there are times that we are going to grow. And again, very specific to industry, but this is so, so critical as a woman business owner to really understand these three metrics at the very basis. Now, let's get into a couple of other ones that are a little bit more advanced, but they are ones that I work all of my clients, usually not right away, because there is a grace period where you're really starting to look at these metrics. I really start most of my quarterly clients on those top three. So the new leads generated, my sales, cash collected, and then my number of clients retained. And that also is cash collected as well on a membership type basis, if that is some of your business model. If it isn't, that's where I really start helping businesses figure out what could they add that might be monthly retaining, and create some auto pay and reoccurring revenue versus 100% one-off revenue, which is, like I said, very freedom building and generating. So the fourth one, most important one, my golden principle, the power in paying yourself first. Here's another thing that you would find shocking. Most women business owners in my initial intake eval, this is one of my number one questions is how much did you take home as the owner, in terms of income? You would be shocked to see how many fill in this number with a zero, or how many don't even get on that first call with me based on this question because they are embarrassed to say that. And I always say this, this was the hardest lesson for me to learn, and it is why I have become so passionate about teaching this because it was a game changer on how I treated my business once I started to see the reward of actually working in it before I switched to working on it. And I think what's really, really huge here is that the typical business owner that comes to me for coaching is going to be someone who typically wants to make more by working less. They're looking at scaling. And while scaling businesses is really not my hot spot, um, paying yourself first really has become it because it's something I'm so passionate about. Because I always want to tell women business owners that you started your business for a reason, for you to have freedom, not for your business to run you into the ground. And the average person that's coming to me, that's their biggest pain point is that their business is running them and they're not being compensated for it. So this is where we look at what we call owner's compensation. Now, I've talked about this principle before. This is probably another episode that needs to happen, but owner's comp, and that is what comes home to you in your bank account. Now, there's many varieties of ways that that can be paid to you based on how your business is structured. However, with that said, owner's comp and profit are not the same thing. Also, what's not the same thing is, "Hey, I took this much money out of my business." For example, I paid for my cell phone, I paid for my car insurance, I paid for my health insurance through my business as a tax write-off, which there are limitations around. And so with that said, there are many women that say, "Oh, well, I didn't pay myself, but I did take, $5,000 out of the account this month. And, I paid for this, this, and this." Some of it is stuff that can become write-offs. Some of it is questionable and actually is really what we call owner's distribution. So with that said, owner's comp is what did you actually take out of the business as a W-2? So that would be a payroll employee, salaried employee, as a maybe it's even if you want to get this close, maybe it's even cash tips. And then the third one is going to be like dividends. So how you got paid, it depends on, again, your entity structure of how you do pay yourself, which is a lot to do with is a very, very critical important step to tax strategy as well. And so owner's comp, what did you pay yourself? And again, I find many women business owners, they start by tracking this and it's a big fat goose egg. And this is when you have to really start to lean in and first of all, start to embrace and accept you started this business for a reason. And if you consistently get a goose egg as compensation for it, then it's not a business. It is a hobby. And this is why I take this very seriously because I work with people that own businesses that they run instead of it running them. So that is number 4. Number 5 is going to be an assessment of your overhead. So what actually went out? Now, I should also say this caveat here. What went out for your overhead? So this is going to be payroll, but it is not going to include yourself. This is going to be rent or mortgage or utilities or all of the marketing expenses, all of the professional expenses you had, what it actually cost you to run your business the previous month and ultimately the last 3 months, because we're looking at your quarterly intake or outtake, I should say. What are the expenses you had for your business? This is where you start tracking this number and you start seeing, hey, of what I'm paying out and what the percentage of owner's comp separated out from your expenses should be. So we want to really start tracking this number because these are two numbers. The owner's comp, ideally, we want to increase, while the owner's expenses, we actually want to just maybe not decrease, even though that's always a goal, but we might just want to sustain, or we might want to plan for the future with it, such as, hey, maybe we need to hire an employee if we want to scale ourselves out of the business more, which means that this expense category is going to go up. Possibly temporarily until that person can justify paying themselves. And I'm going to talk a little bit about hiring strategies and scaling your business on another episode. But this is where we start to track your overhead. So these at the very baseline are your base metrics we're looking at. Number 1 is the new leads in, sales, cash collected, and the retention. That's number 3, right? So retention of retained clients. The fourth one is going to be your owner's compensation. So what hit your bank account that was paid to you directly from your business as the owner. And then the fifth is going to be your overhead. So what was your fixed overhead minus your owner's comp, because that should be separate, even though it is an overhead expense that you obviously will deduct off your taxes. Next thing, depending on how you're paid, I guess I should say that. So, these are the 2 bonuses I wanted to cover today. The bonuses is your next thing is your profit percentage. And there's a real strategy behind this. I'm going to save that again for another episode because I really want to dive in the difference between owner's comp and profit. But we're looking at always increasing your profit percentage. But at the very beginning, we need data to determine where you are starting from when it comes to your profit. And we want to start to look at like, hey, is it you making 1% of your profit? Are you making 5%? Are you at 10%? Are you at 20%? Now, obviously, this percentage is really going to vary based on the type of business you have, whether you have a product, a service, how it's priced, what the cost of goods to produce that service is, or fulfill that service with in terms of employees. So, or a team, I should say. So, there's going to be many factors in what your profit is. But what the reason that I call this the bonus is that This is ultimately our goal, is that we want a profitable business that also pays ourselves. And so unless what's the point if we don't do that? Because what I tell women that do not pay themselves, even if it's small, and I start most women when it comes to owner's compensation, I have some women that I start with $100. Like, it's very tiny at times because we're looking at building the habit of paying yourself and not overpaying yourself to where you're gonna stress your business at model. So this is where profit is really, really critical for us to start to really track and identify here. But it's also more ninja because like I said, I like to work women business owners up a ladder of like, "Hey, let's start with 1, 2, and 3, leads generated, sales converted, patient our clients retained at number 3. Number 4 is gonna be starting to look at what we pay ourselves, owner's compensation. Number 5 is gonna be looking at our overhead minus our owner's compensation. And then number 6, this bonus one is gonna be what's our actual profit percentage. The 7th one and the bonus that I'm going to, throw in here because I think it's very timely based on the season right now, is this is absolutely tax planning, in my opinion. And I start having people look at like, "Hey, of that profit percentage, what needs to be put aside for taxes to give you peace of mind?" This is probably the second biggest pain point I have with all of new clients coming in with me. And that is this. Number 1 is, like I said, they don't pay themselves first, or they don't know what to be paying themselves, which we work on. And then the second thing is that they don't know what percentage of profit it is. Like, they don't really know how to measure it. And I guess I should say the third, it would be this one would be, planning ahead for taxes. And this is if you listen to my episode with my friend Lorraine, who's a CPA, and we talked about the difference between tax prep and tax strategy. I believe it was episode 11. If you want to go back and listen to that, it's an awesome episode. And we talk about the difference between tax prep and tax strategy. And this 7th bonus strategy right here of measurement for the metrics that matter is absolutely one I found that was the most game changer for me. Because when I started looking at tax strategy where I planned ahead, it gave me a whole different level of peace of mind. Because the biggest challenge I see with a lot of business owners, especially when you're first, I would say 5 years in business, is kind of a critical point, which many, many businesses, I don't know what the current percentage is, but it is a huge number of businesses that do not make it to year 5. And guess I should really make a note to look that up. But I want you to really think about here is that this is where you're really building that proactive muscle versus the reactive muscle because many women business owners are paying their taxes from last year with their cash flow from this year. And it is the most I used to be one of them. That is why I became so passionate. Like I said, I'm passionate about 2 things. The biggest 2 things I'm passionate with actually, I should say, let me say that even refine that. The biggest 3 things I am passionate about is number 1 is that for you to have a great business, you have to become a master at marketing and sales. Period. Mic drop. The second thing is that you have to be cool and get really comfortable with paying yourself first, not only on but also on a consistent basis. And the also knowing your profit percentage, that would be number 2. And number 3 would be the power in planning ahead for your tax strategy and working with a professional person to plan out your tax strategy to create peace of mind so that and come March when you file your corporate tax return, you don't have a $40,000 bill that you didn't know you have because a proactive business owner already knows what they're going to owe, and they're starting to make quarterly estimate payments to chip away at that number until the end of the fourth really going into fourth quarter when then you might start to make some moves. And the best time I find to make tax strategy planning is absolutely end of first quarter. So you're looking at what you did last year tax wise. And then now you're looking at also most people start in the end of third quarter, going into fourth quarter, going into the end of the year because they know they can't make up for lost time, right? You know that if January 1st becomes, 20 January 1st, 2026, I can't make up for what I did in 2025 and have a lot of strategies. There are some that I can apply now in that sector of the that I could have applied when I was actually in the year that we're going to be filing for. So those are the two bonuses is profit percentage, knowing your profit percentage, and tax planning ninja style. So, and I really just wanna end with on that bonus one too, is that there I cannot say enough about working with a tax professional, for the strategy part. If you are interested in doing that, please reach out to me. I have several people that I can, match you with so that you can make sure that you feel like you find the right fit for you and your business, because there's all different, types of tax strategy. But the worst thing you can do is get into and keep the mindset of my accountant handles that. And remember, your accountant is a very important person in your financial team, but they are not the end all be all. And they are the person that's going to file your taxes for you too. But usually, even though it is accountants that typically offer tax strategy, they are two different things, tax prep and tax strategy. So, this is a really good quarter, end of Q1, to really look at this. So, just in closing, let me wrap up and go back over what this process is in a nutshell so you can start to utilize and put this framework into your business. Number one is going to be at the very base, we have to figure out how many new leads came in. We are looking to create data by measuring metrics that matter to your business to show us the trajectory of where you are headed. And that is going to be new leads generated. Number two is going to be your sales and your cash collected. This is going to be one time, so previous month, one time payments, knowing that it's setting you up for number three, which is retaining clients. So your current retention, number of reoccurring cash collected, or the actual sales percent, the sales number of it. In addition to number of clients retained. So if you went from in January, you had 5 clients, and by the end of March, you have 10, that's a really good trend we wanna look at. If you had 5 clients at the beginning of January and we're going down to now we have 2, that's gonna be showing us a different trajectory that we need to interfere with. And then the fourth is gonna be your owner's compensation, and what do you actually pay yourself that hits your account, not what do you take out of the business. Separate, it's separate from profit. The fifth is going to be your overhead. So what is your fixed overhead minus your compensation? The last previous 3 months, January, February, March, if we're looking at Q1. And then your bonus metrics are going to be your profit percentage. How much profit did you actually make? And that's going to set you up for the big one, the heavy hitter that most of us would rather avoid, but is the biggest, could be the biggest eroder of your wealth. And that is going to be your tax planning strategy. So looking at like, hey, this is what I would owe and this is what I'm going to make for her quarterly payment, and or this is where I'm going to, start to put some tax strategy in place. So I hope you guys have enjoyed this. Please, please, please also know that I am going to be set, like I said, putting together a resource where you can enter your email and I will send you my questions of my questionnaire for how I do a quarterly business review with my one-on-one clients, which is a huge value add. And if you do that exercise, I will even give you a discovery call for free with me, 30-minute discovery call where I will review it with you. And that's going to be in the show notes with that offer for you to do that. If you'd like to take it up and book a call with me, if you are a mompreneur looking to take your business to the next level and be both purposeful and profitable. So, as always, if you liked this episode, please share it with someone that you think this could help. And also, please remember to rate, review, and subscribe. I really appreciate when you do that. And I look forward to your feedback on if you do this process, when you do this process, on how much it has started to shift your business for the better in 2025 just by starting to measure metrics that matter. We'll see you next time on Moms Makin Dough.